Hello, everyone, and welcome to this BIA webinar titled From Lab to Market, Mastering Real Estate Challenges for Biotech Success. And I'm delighted to be joined by Chris Walters from JLL for this conversation today. So the context for this really is not only mid-year in 2024, but also we're publishing an updated occupier guide if you're thinking about moving premises or thinking about what you need as your company grows. One of the things that we found has been helpful, thanks to the expertise at JLL, is a document to give you the basics on what to think about, some of the terminology, some of the factors that are important if you've not rented or sought a life science property before. So that's really the purpose of the webinar. But it also gives us a chance to chat more generally about the intersection between the life science sector and the property sector in the UK. So, Chris, why don't I ask you to start by explaining who you are, what JLL are, and how you come to be in this happy throng.
Thanks, Steve. Yeah, very happy to and looking forward to the conversation. So, by way of background, Chris Walters, I run the life sciences practice for the UK at JLL. For those that haven't heard of JLL, we're a global real estate advisory business. We have over 100,000 people globally that work, focused on providing services to clients, which pretty much is a full service offer. We can help clients all the way from trying to find a property to helping them build it out, manage it, as well as related to transactional work around equity and debt. So very much a full service business. Unfortunately, not all of those 100,000 plus people are working in the field of life sciences, but it's certainly a part of our business that has been growing substantially, particularly over the past 5 to 10 years. I mean, the journey for me probably started nearly over 8 years, 9 years ago now. Was working in the development part of our business and started to slowly pivot towards life sciences as an asset class. And typically we're working very closely with companies that are looking to find space as well as companies that are looking to build it out. So running a UK team, but trying to have my sort of visibility on what's particularly going on in Europe, so you can help contextualize the UK as well as what's happening on the global stage, which I think is quite important in this sector.
So, Chris, I'm glad you brought that up because I know that one of the things that I've seen from JLL recently is an update on your sort of European clusters wide piece. And it's always useful for me to understand how global players see the UK fitting, certainly into the UK, the UK fitting into the European scene.
Yeah.
What does it look like from a property perspective?
Very good. I mean, UK has performed very well on a number of metrics. I mean, we started doing the EMEA cluster report, and it has got a much longer title. So, but I can't remember it. So marketing won't be particularly happy about that with me. But we first started doing it last year, and we looked at just shy of 40 clusters. We looked at 41 clusters in Europe this time round, and the UK performs very strongly. We tier each of those 41 into 3 different groups. So we have advanced markets, established markets, and emerging. And last year, Cambridge, Oxford, and London were the only 3 that we classified as advanced. Now that list is slightly extended, so we've got Paris, Berlin, and Amsterdam also in that top tier. But to be honest, it's really helpful for us because I think it gives us a bit of a steer in terms of when we are talking to clients, and they are typically multi-country, multi-geography, larger companies on the corporate sides. Or investors, developers that have global mandates to put in capital into the life sciences real estate sector. It gives us a guide as to how these different markets are performing. It's always a bit of a contentious ranking because you'll always have a colleague or client that is in one of those emerging markets saying, well, shouldn't we be established? But so it's not perfect. It's not more than a science, to excuse the pun, but it does give us that helpful guide. And I think what's really interesting in the UK context is that outside of the Golden Triangle, as it's known, there's some really amazing things happening, whether that's in Bristol, Manchester, Birmingham, heading further north up into Scotland, and beyond. There is a lot of really good things happening. And as part of that report, we also, just taking a step back, looking at some of the macro trends, it's really good to see some of the data around the fact that we still very much have a growing industry. So there was 13.5% growth in new companies over the past 5 years, which was good. Venture capital, obviously, somewhat exploded around 2021, but I think the average that we were seeing between 2016 and 2019 was just over 6 billion in Europe. That's now at 13 billion since 2020. There has been a bit of a correction, as we've discussed before, but the sentiment of growth is still there over the long term. And there's some other trends that we've tracked. So rejoining Horizon has been obviously been good in European context. The UK will benefit from that, but there is still a lack of purpose-built, or not necessarily purpose-built in terms of new build, because it can also be conversions, but simply high quality commercial lab space that's available in the market. And I think in the real estate context, that's what's quite exciting about opportunity, because these companies that are being formed are raising capital. They need somewhere to go. And I think some of our investors, that real estate investors, that is, rather than venture capital funds that have been looking at the UK market, are now increasingly looking at Europe, because it's a bit earlier in the cycle. There's a lot more growth and maturity to come. And purely from a real estate perspective, that is positive in terms of growth and opportunity.
Yeah, thank you. I mean, it's really interesting to think about it, because you see it through if you like, the different end of the telescope. I would always start with talent and people and company formation, spend most of the time knocking around with the leaderships of life science companies, and usually they're focused on the great science, seeking the money to get that science to go forward fast, and then probably the people who can, if you get the money, you need to be able to progress the science. And then, of course, the fourth dimension you've got to think about is, where the hell are we going to do this? And I think much of what you're reflecting there is resonating with me, in the sense that I think we're fortunate in the UK because we have the density of talent, both in terms of university and scientific talent, but also people who've been in companies before and want to go again. And in some respects, it's easier to put companies together around the people and find the places that the people want to work for and want to work in. As you say, there is an increasing need for some of those specialist types of builds, where you have to think about what state of readiness is the lab in, can you move in tomorrow, what amount of spec have you got to put into it to make it right for you. But I'm seeing continued need and desire for that in the sector, and as always, I think money talks, and there's still, like you, we see the sector rebasing to a higher level in terms of investment than we had prior to the pandemic, but probably not at the toppiest levels that we saw in 21. But I think it's still a sector with heft, and I have the privilege to go to many of the new company buildings that are opening around the UK, and I agree with you. There's stuff happening across the UK, not simply in the traditional hotspots of Cambridge or Oxford or London.
Yeah, and the point you made around the consideration of attracting and retaining talent is, we're hearing exactly the same. So if you sort of broadly split our client base at JLL, even though we're doing it through a real estate lens, you can broadly split them into companies or occupiers that are looking for space, and investors and developers that are building it. And particularly where we're working with sort of mid-cap companies or larger corporates, I think the ability to attract and retain that talent is always the number one consideration. So what we're trying to do, hopefully successfully as a business for some time, is get under the skin of what is driving a business's growth first and foremost. And typically that's, a number of factors which are completely unrelated to real estate. And so we're trying to give them the tools to make a decision about the right location to go to based on what works there, the science or R&D they're undertaking, and where they want to grow and how they want to grow. And then the real estate is really meant to be an enabler. Sometimes it can be a blocker in terms of pure availability, but I think that's part of what we're hopefully doing with clients in terms of guiding them through the process. I mean, some of the other things that we picked up when we did that EMEA cluster report, for when we were looking at occupier trends, was around increased focus on sustainability, question mark around how things around AI would be changing the way that they undertook business. So would it change the way that they use their physical space? Would it change the way they undertook drug discoveries? I think the AI point is probably, well, definitely good to get your insight on that, because I think when we think about it, it's quite difficult to gauge what the true impact is because it's happening at such a fast pace, but it's certainly a trend that we're watching quite closely.
So, I mean, I think it is interesting. I don't think we've yet got to the stage where everything will be done on the computer and then printed out on a 3D printer, because the engagement with biological systems still remains complex. I think there are certain parts of the process where I think you can see things are speeding up, or you can see that. So, for instance, the ability to more exquisitely do target prediction, if you've got protein shapes, seems to be making sense. The investment in companies that have got that, and large pharma are doing lots of exciting stuff in that space. So I think we will see steps in the drug discovery, drug development process be very amenable to large language model type AI processes, and I think that's probably happening in real time. Remember, we've got a process that needs to be made more efficient. The drug discovery process is incredibly inefficient in terms of selection to actually successful molecule. So there's plenty of space to be gone after. But at some point, you've got to still, for good reason, test much of this in a biological system and in a clinical trial. And again, I think that those systems are going to require wet lab work. They're going to require interface with the health service. They're going to require all of those things, which is important. I don't know whether you're finding, I'll take you in a slightly different direction, that the post-COVID experience is that there are entire functions in the companies that can work entirely remotely, and therefore we need to reconfigure or think very differently about the number of office stations that are needed. I don't know if that's something that's come up in your thinking or in the worlds that you talk to.
Yeah, no, definitely. And I think particularly for those clients that are, multinational corporates, and they have a number of different functions within their business, and they're constantly looking at where can they optimize the portfolio. And typically that is always science-led, business-led in terms of what they want to achieve. And then the real estate sort of action follows typically. So certainly I think around COVID, it's incredible to think of that time. It just completely turned things on its head in terms of how you would use the workplace in a real estate setting. And I think we have seen some of those functions that were done in the office sort of not come back into the office place because they can be done in other means, in other ways. We've also seen consolidation across clients' portfolios where they're putting specific functions in a particular market because they want to get access to a certain talent base or access to certain academics, researchers, funding, whatever the case may be. So I think it's one that's under constant review. And, as time has evolved and we've come out of that, that time where it was, we had, people that weren't able to go to their workplace, it's still under review. And this point around AI and how that can change someone's business, as you alluded to, it's not going to impact everyone the same. And so what we're trying to grapple with when we're being asked by our developer investor clients who are building, putting up buildings or converting buildings with the objective of them being there for decades, not, a smaller window of time. The problem we have in the real estate industry is that the pace of change in the sector is so rapid. And so trying to toe this line between providing flexibility day one without doing so much flexibility in the construction and delivery of a building so that it becomes commercially unviable is a constant question and a constant challenge. But I think we as advisors and our peers will be the same. We can only advise based on what we've seen and what we think is in front of us based on evidence. Otherwise it becomes quite Mystic Meg crystal ball gazing as a result. So it's challenging, but that's the benefit, I think, for me, for being in a global business where you can share best practice and trends and see what's happening in other markets, particularly in the States. because you can then see what's happening arguably more at the coalface of in terms of scale of change in the real estate context, and think about how that might be applied to the UK market.
Okay, well, I'm going to give you an assertion and then two theses, and interested in your take on whether my assertion is right, and if my assertion is right, which of the theses is the one that's best to go with. So my assertion is that I think we're seeing more and more of properties that are being used for life science companies being in cities that are either walkable, cyclable, public transportable, and is that either A, because of connectivity and the desire to be close to perhaps universities, which are often more like that, or big cities, because that's where talent that you are trying to get from is coming to. So is it because that's where the talent want to be, or is it because the company leadership want to be connected? And is this also, I suppose, my thesis is that this means out of town places are probably not where most people are seeking to go, and we see far less of that. So we're becoming townies rather than out of towners.
So I think the point that you were saying in terms of is it employee led or sort of employer led? I think the employers are trying to make decisions around where they place their business based on the ability to attract their employees. So it is still very much talent led. It's pretty rare, it does happen, but I don't think key strategic decisions around where businesses are located, particularly sort of middle to large ones, are driven by single individuals necessarily. I think what's driving this shift around or movement towards delivering more urban labs is exactly as you described. It is around how do we attract this talent? What does this talent want to do outside of working hours? Is there good amenities on the doorstep? Can they go for a drink after work if that's what they like to do? Can they go for a bite to eat? How well connected is it? And I think in a lot of for any asset class within real estate, sort of the fundamentals around accessibility, transport, amenities, the sense of place, etc., it resonates across all. What's happened in the UK context is a lot of our existing science product in the real estate sense has been in out of town locations, built up over a number of years, decades in some instances. But it's where I tend not to think of it as an either or, in the sense that if you look at some of the most established science and technology parks, one of the things that we think it makes them so attractive to companies, particularly scaling companies, is that they've got the ability to be part of an existing campus where there is like-minded companies or companies which will be beneficial to their growth, and they've got access to talent all in one place. So I'm sure, although we've never tracked it, but I'm sure there's a lot of movement around different companies on a single science park. But in the same breath, you look at sort of Cambridge and Oxford at the moment, we don't really have purpose-built, privately owned lab space. It's coming, and that will start to change the dynamic. But what I always say to clients, and pretty consistent, is if you are looking to bring forward space, whether you're on an established park or you're bringing it forward for the first time, think about how you're going to attract that talent, because it's not good enough just to throw up the building and hope people will come. You really need to invest in the softer element, I think, in order to attract that. And if you just take a step back away from being an advisor, or you or I just thought about, well, where would you want to work? It's like, well, you want to work in a place where you can meet people. It's a nice place to work. You can get there easily. It becomes quite individual, personal quite quickly. So it's really important to get those fundamentals right, I think.
It is interesting when you look at, I look at developments that I've seen on existing parks. So if you think about Grants Park in Cambridge, the big development there has been more amenities in terms of a decent place to get lunch and a social hub. If you go to Audley Park, then again, that moved into being its own place just in Cheshire, out of the AZ family. Again, it was other things that were built around it that I think have added to the attractiveness of it. And then, of course, anything that's downtown, or it's interesting in London with the connectivity you see from the Elizabeth line or King's Cross, they all seem to be going great guns. And I think that they are globally competitive on that basis, because their access to either global cities or the equivalent that you'd see in terms of some of the facilities that I've seen in the Bay Area or Greater Boston, perhaps with dare I say it, easier commutes if you're in the car, and certainly a higher level of public transport infrastructure, much as we moan about it in the UK. So yeah, I mean, let's get to the nuts and bolts of the what does you think the market feels like in middle of 24? I mean, the trick is always to match supply and demand. Where do you think we're doing on that?
Well, I think in terms of like active demand, so sort of named requirements for the sector from a real estate perspective, I think they were certainly at their peak, sort of end 21, beginning of 22, and it's no surprise that was linked to what was happening in the venture capital world. I mean, it's a pretty crude linear connection, but companies raising money typically then need to secure space if they're in growth mode. So it has come slightly off the pace in terms of where we were at its peak, but certainly Cambridge, Oxford, and London as the three most advanced markets, as I described earlier, are still robust. And when you look at, so in the real estate world, we look at things like named requirements, we look at the availability of space or the vacancy rate, the development pipeline, and vacancy rates today in Cambridge, Oxford, London range from 3 to 8%, so still relatively low. And we're starting to, as you've mentioned a couple of locations or schemes already, we're starting to see more products come forward, and sort of the absorption of space, as we would describe it, so people actually committing to new leases, is very closely linked to new space coming online. And we're starting to sort of go on a bit of a journey, I think, over the next 2 to 3 years, where a lot of good quality new product will come forward, whether that's Victoria House in Bloomsbury and King's Cross, One Granta Park at Granta Park in Cambridge, Harwell Campus in Oxford, and there are many others that are coming forward, which will be much needed accommodation into those markets. But as we touched on earlier, it's not just about the Golden Triangle. I was at a Cambridge Enterprise event last year, and there was the Golden Diamond with Manchester, which I liked. I was thinking, how many shapes can we get in the UK?
Well, I always like a double helix, because in a sense it's got a sort of triangle at the bottom and then a triangle at the top, and that means we have to pivot around probably Birmingham. But I think there probably is opportunity that's the length and breadth of the country, and actually I think that the traditional regional geographies, in terms of the layouts of the types of industry, may mean that if we can do well in some of the advanced manufacturing in medicines, there are some significant opportunities to plug into what I call the old ICI map of Britain, where you've got the ability to manipulate chemicals, you've got the ability to take large amounts of power and then export with access to the sea, which doesn't take you to historic cities of learning, of which absolutely there's the fundamentals for work that goes on alongside university innovation and university discovery. But there's a whole nother sector to life sciences or deep biotech or the bioeconomy, which feels and looks a lot more like some of the stuff we saw back in the day when corn was being invented in the ICI labs in Teesside in the northeast. So I have a fairly broad approach to what the type of sector, what the sector is going to look like in the next few years, the type of problems it will be focused on, and therefore also the types of space that it will require. And it's, as you say, it's hard to get to do this properly without getting into crystal ball gazing. But I think there's distinct different advantages in different parts of the country.
Well, you touched on the manufacturing point, Stephen. We did a paper earlier this year just looking specifically at cell and gene therapies market. And I'm interested in your take in terms of, in the property world, I think we're quite guilty of just talking about traditional R&D labs. That's what's covered in the property press. It's not, I'm sure it's not covered at all in the science industry press. But just to get your take in terms of, I assume that you share the view that it's more than just traditional R&D labs, and actually what we're talking about here is quite a broad range of different building types and products that are going to be needed to cater for the market in the UK.
Yeah, absolutely. And I think if you look at the investment in talent that we've put into Stevenage in terms of the cell and gene therapy catapult, if you want 200 people who know what they're doing in cell and gene therapy manufacturing, one of the best places in the world to go to is Stevenage. People might not think of it, but there is a large amount of talent there. They can afford to live and work and get into the space there from around Hertfordshire, East Scotland, and down to, particularly Roslin and south of Edinburgh. Again, another cluster with capability, capacity. Anywhere where you've got NHS blood and transplant having a big centre, a bit like Filton in Bristol, becomes a place where you've got people who know how to handle and would know many of the processes that are close to cell and gene therapy and anything that you've got to apheresis in a hospital. So there are pockets and clusters where I think you've got that. And then I don't think we've yet worked out our entire manufacturing processes for these things. We're really at the infancy of that, particularly in terms of allogeneic transplantation. You can see that there's really exciting data on that in science, and if that does fly, that's going to need somewhere to go. Likewise, I look at mRNA and think, again, we're in the foothills of that. Yes, we've had COVID vaccines and mRNA, but actually the opportunity probably lies back in certain types of cancer vaccines or immunotherapies there. And again, how that's going to be made, where that's going to be, what that layout looks like, again, is TBC. So I think there's lots of interesting space there, and genomics and what do we do with that type of piece, again, is another area where I think we're going to see large scale adoption, which means probably more capacity. But how's that going to be organised? Who's going to do that? And where's that going to be structured? It probably can't be in sheds on university hospital sites, as far too much of UK diagnostics has been hitherto.
Yeah. It's good to get your take on it, because I think we're, as I touched on earlier, we're trying to think about where will be the areas of growth within the UK market, and what's the type of real estate that we actually need to deliver. And one of the things that we've been, I think, seeing a bit more of a recent trend is for companies that are looking for what we would describe as mid-tech product, which is, from the outside, if you were looking at it from just the base building, it's got a 10-meter clear eaves, it's the ability to put in a mezzanine floor across part of it, but essentially it gives the occupier the ability to use that ground floor almost as like a workshop, manufacturing lab space, with some of their support right up office space on the mezzanine above. But it's highly flexible, not particularly sort of in terms of technical specifications, a very different beast than doing a traditional biology lab, CL2 biology lab, but just gives some flexibility. And we're finding that companies that don't sit within the direct sort of immediate lane of being a biotech and needing that traditional R&D lab space, and they are part of the broader knowledge economy, so broader definitions of science or technology, a lot of space companies, energy, that's the type of space they want. It's because it suits their business growth, it suits what they want to do. But we've got quite a bit of provision of that in Oxford and other parts of the UK, but get the impression that will probably come. There'll be more of that.
So yeah, always interesting to see. I'm interested to come back to the BIA members' need here, which is, if I'm looking to acquire a premises, what are the basics that, if I've not done this, I've got some money together, what's the first principles you think that I should at least be thinking about? How far in advance do I need to worry about this stuff?
I mean, I think best to plan early, really. I mean, we've had the benefit of spending time with you and your membership group before, Steve, recently and in the past. And I think what we recognize is that we are coming at this from a real estate lens, and we're trying to, as an advisor, or to give people a guide in terms of how to think about the real estate industry, furnish you with, and the members with, tools to help understand how to navigate it, because we appreciate this isn't the bread and butter job that you're doing. You know, a lot of the people that are founding businesses are founders, CEOs, CTOs, CSOs, and as you touched on earlier, rightly, they are focused on, well, how can I grow my business? How can I raise capital? And then real estate is, you know, relatively low down the pecking order, is the general observation that we have. The problem that I think we've had in the property industry is that we then can become a blocker, because if that space isn't available, I mentioned the low vacancy rates in all of the advanced markets. If it's not available, then it can stifle your growth. And so thinking early around, well, if I do this fundraise in the next 6 months, what's it going to do to my headcount? And what is the existing position on my license or lease in the premises that I'm in? How flexible is it for me to get out of it? How much space am I going to need in the future? What does that space look like from a technical perspective? They're the key things that any business really needs to think about, and really was the genesis of us setting up the Lab Occupier Guide last year. We revamped it this year. We put in a bit more detailed commentary around the process, but the idea is that it's giving any individual or company that is operating in this place a overview right from inception all the way to occupation. But I think some of the key things, yes, plan early, but then when you start getting into the nitty-gritty of it, I think some of the key things to think about are, you know, what is the key consideration for your business in terms of, is a certain geography going to give you access to the talent? Does it have the transport, the connectivity, all the things we talked about earlier? But then also around the technical specifications. So being able to come to a building, or when you're looking at buildings, have a very clear idea of what that specification is that you need, which ones are, which parts of that criteria are fixed and just non-negotiable, or which ones are open to interpretation. And that's where we find we can add the most value, because then we're translating it from a science into a real estate context.
Yeah, it's interesting. I had a summer job when I was a kid a long time ago, putting access floorings into buildings, and so that's where I learned about head heights and all the rest of it.
Yeah.
And going into some buildings now, they're built with the metal joists have got pre-made holes in them, whereas if you're in a building that's got concrete joists, you can't bang a hole in it. And it's stuff like that which, if you were to put air handling or ducting in at some point in the future, can make a real difference between it being relatively straightforward and an absolute pain. And I suppose I agree with you. I don't think that real estate is the first thing that everyone always thinks of, but it can become a real, if you end up with the wrong thing, or you can't get to where you want to go, you can end up with people who are either stuck and perhaps then losing efficiency in terms of what they can do, or losing people because somebody else has gone somewhere else. So I think it is worth having a look at this, and I hope that the guide that we've put together helps people with that thinking process. And we're always keen to get feedback if there's feedback from anyone who's used it and you found it useful, or think we should have put something else in, then please tell us. So, Chris, maybe as we come to the end of our conversation, I wonder where you think we might be going next. What's your outlook for, where does life sciences fit against all the other things that, when you go to JLL global meetings, you have to look at? Are we seeing the return of retail? Is it the rise of the renter? Is it going to be sports stadiums or golf courses ahoy? Cruise ships, I have no idea. What's hot in the property sector this year?
Well, I mean, life sciences has fared very positively. I think we do an annual survey with our investor clients, typically of which, you know, they are global investors, look at multi-asset classes. And life sciences, I think, was ranked second out of about 15 or so in terms of one of the areas that they'd like to continue to invest in, one of the areas that they thought would be the most resilient in the next 5 years. So that's good, because I think it shows that real estate capital is still committed to the sector. I think, you know, every sector goes through their moment in terms of, and it's quite heavily linked, as you'd expect, to the bigger macro picture around what's happening in the economy and the financial markets. One of the trends that I've observed has been that the operational asset classes, so things like hotels, hospitality, life sciences, data centers. They are getting a lot of focus from our investor clients. And I think, outlook wise, I think we're going to start to see for me, the UK market continue to grow. There's some great quality product that's coming forward into the market by some really established, well-known investors, developers. As I said, the demand for space is still robust, and it's not just a golden triangle only picture. So I'm still very positive. I think, speak to our colleagues in the States, and from a real estate perspective, it's quite different. They've experienced significant growth and a significant correction in a lot of markets. But I think you always have to take a step back and look at the macro trends around job creation, venture capital being raised, the pace of technology, of change in modalities and technology, and think that we're in the right place. So hopefully we'll continue to see that growth, which will be good.
No, I agree. I think that we were critically undersupplied in this market with the type of stuff that was needed. I think that started to correct, and I think we are now starting to see at least the potential for some of this to enable the sector to grow and flourish. And I think people will see themselves working in quite a lot of people will see themselves in new premises in 2 or 3 years' time, whether that's through a new company or with existing companies growing and moving. So I think it's on the up. I hope, and final thought from me is, with the new government coming in, whether if there is the planning changes, whether that will make an impact on the property scene in the UK in the next 24 months.
Yeah, well, I think I suppose the devil's always in the detail. I think in principle, if the more efficient and seamless the planning process is, the better. I think it gives certainty, it gives clarity, it de-risks the ability for someone to deliver new space. We have seen some changes in the planning context which have directly influenced how life sciences buildings are being developed, which is good. So the movement around the town and planning use order, so that life sciences now forms part of EU's class, which is sort of the detail bit. But generally what I think we're finding is it's a resource thing. It's the availability of officers to really look at these applications and bring forward robust decisions quickly. We're starting to see that, I think, in some markets. There's been some notable consents gone through, particularly Cambridge, which will start unlocking land for development, or for development that's due to come forward. But I think we shall see how it unravels. But I mean, the bottom line is more clarity always brings efficiency, because it just gives people comfort that they can get things done. Brilliant,
Chris. With that, I think we should finish the conversation for today. Encourage people to look both at the Occupier Guide, newly published to coincide with this webinar, and of course your excellent sector overview, the EMA one, the name of which escapes both of us, but gives clusters in context piece. So thanks very much. Thanks for the partnership, and look forward to chatting again soon.
Thank you, Steve.